Welcome to Virtual Coffee with Dawn Rickabaugh, the Note Queen, where we talk about owner financing and notes. Financial solutions, one mom and pop to another.
My name is Dawn Rickabaugh. Welcome to Virtual Coffee, anything owner financing and notes. We're here once a month just talking about this sort of niche space that I really love. And my whole idea is I want it not to be niche. I want people to be able to flip or buy and hold or wholesale or whatever notes just as easily as you do real estate. Because when you can do property and paper with equal ease, it's just amazing the kind of solutions that you can create. And when you create enough solutions for other people, of course, you tend to make more money and have a lot more fun. So that's kind of what keeps me going. I really find a lot of meaning in what I'm able to do here in my own community especially. But, in reality, the note business is really a national sort of business. You can do it anywhere. So, but it's still very mom and pop, right? It's just one mom and pop to another. So anyway, Axel, before I go further, can you just lay the groundwork again for people, the little housekeeping rules?
Sure. If for everyone on a computer, you have the ability to unmute yourself. In the bottom left-hand corner of your screen, you'll see a little microphone. So when you do want to engage, or if Don opens up the lines, or if you have a comment, feel free to unmute yourself. If you're calling in, which I do see we have a few callers, you can press *6 to unmute yourselves.
Okay, thanks very much. And again, just for those who might be new, you probably already have found me on notequeen.com. I'm not sure if you came on via podcast or some other way, but my main website is notequeen.com. We just closed registration on our propertypapersummit.com. I do once a year. I do a 2-day live event at South Lake Tahoe. This is our second year, and we sold out three weeks ahead of time. It's a very, if you want to put it on your calendar for next year, I usually do it the first Monday and Tuesday of October. So if I decide to do it again next year, that's when it's going to be. But it's a very small, intimate gathering, and it's really special and different. I was surprised at how much value that myself and everyone there got. I mean, it was just, I don't know, right, Axel? It was just really special somehow. It was just really, a powerful connecting type of time. And a lot of times the smaller events can be better because, you tend to do business with people like, and trust. And instead of hanging around with a lot of people that, not that being new is bad, but like when you're really serious and you're really engaging or you're ready to engage, you want to be hanging around and rubbing shoulders with and getting to know the people that actually, doing stuff in their local marketplace. It really helps jumpstart you. And I've been going to events, since I was still working as a nurse and raising 4 babies and all of that. I was always going to weekend warrior type events, and I still go to several events a year. So it's really great to get out there and meet people and just pick up on the vibe and the ideas around you. So anyway, so for those of you who are signed up, I will look forward to seeing you. I guess that's just not even 2 weeks from now, right? A little over a week we start. So that's exciting. And anyway, so notequeen.com. And if there's anything else I'm supposed to say, I forget what it is. But anyway, so if you're local, that's the other thing I wanted to say. So besides this call, I do a local meetup once a month in Carson City. So if you're anywhere within 30, 40 miles, please feel free to come over. That's the last Tuesday of every month. Since we don't have any hotspots, and Axel, please kind of watch the chat for me since I have a hard time focusing on that. One thing that I wanted to share that I did at my last meetup group, it's so fun for me when I can go, I'm taking a deal, I can take a situation and we're gonna put some meat to this. So this guy, and I can take my knowledge of making loans and buying discounted notes and investing in property, and I can combine them all together to create a solution that otherwise wasn't available, at least for this guy in the time period. So I get a call. Actually, this was a referral, and a lot of my business actually does come by referral. People say, hey, you know, and a lot of times I don't even know who the person is, but they say, look, I can't help you, but why don't you email Don? And he says, I was referred to you, that I had a note I was trying to sell and I couldn't sell it. It is it's secured by 10 acres of vacant land outside of Lancaster, Palmdale area. So for those of you in Southern California, you know, it's kind of north of LA and east and out, you know, below the Mojave Desert out there. So it's kind of out in the boonstickies. It's not right in town. You got to drive out a ways. So the collateral ended up being the problem here. He had sold the property for like $55,000, took $3,000 down. It's paid for a really long time. I think not a really long time, 3, 4, 5 years. Perfect payment history. Credit score of the guy's decent. But the problem was the collateral. So he's going, I really need to get 20,000 out of this note. It appraised for 40,000. So 50 cents on raw land could potentially be okay. But in this situation, I'm like, yeah, no, it's so easy for the market to change and land to go down to nothing. So I said, why are you selling? And the reason is that he was in foreclosure on 160 acres of commercial land up north of here in Winnemucca area. In those areas, 160 acres of commercial and other mixed use sort of stuff. And so he had a lot to lose. And he goes, all I need is $20,000 to cure that default. And he was just up against a wall every which way, you know, he could look. And he goes, will you make me a loan? I said, well, that's going to be really expensive. And really, I don't do a lot of originations. But, you know, I said, look, if you only owe 20,000 and you got behind, I'm just saying, I don't want to be the next person in line that you default on, you know, so we have to figure how I can solve your problem and keep you out of foreclosure, while at the same time making sure that I have payments coming in. Because I could be okay, especially if I just throw it in one of my self-directed 401ks or a Roth IRA or something where it's patient money and I don't care, right? I could be like that, but I said, I really want to get paid off. I'm not trying to go loan to own or whatever, these properties. So I go, I can do it. It's kind of expensive. I'm going to charge you $2,500 for a small loan because it's the same amount of work as a bigger loan. But so what I did is, the original idea was, okay, he only came to me because he wanted to sell the note, but I couldn't give him what he wanted for his note, 20,000. But I said, look, I'll loan you 20,000. I'll just do a refi on your 160 acres, get you out of foreclosure, and I'll do it. He was paying 15 or 16% interest to the previous guy. And I said, look, I'll only charge you 12. Yes, you got to pay me the $2,500, which is a stiff origination fee really for that small of a loan. But I said, I'll only charge you 12%, but you have to give me, I'll take assignment. I'll take a partial. I'll buy a front-end partial. It'll be like the additional collateral. So he assigned me his Lancaster note that was paying $400 a month. So the $400 a month goes to service the debt on the loan that he needs to pay off in a hurry. And then when that loan amount against the 160 acres is paid off, then I release the note and I give it back to him. That way he doesn't have to take such a massive discount, right? The property value of that 10 acres is 40,000, recent appraisal, and the UPB unpaid principal balance. So the remaining balance on that note is 38,000, and I couldn't even pay him 20. It didn't matter what the yield was. I'm not even using my calculator at that point. I'm just saying, you know, how much am I willing to risk against this collateral, and given the state and everything like that, the type of foreclosure thing. So he was super happy. He was just like, oh my gosh, you're the first person that seems like you're really trying to help. And this makes better because I can solve the problem, and I don't have to discount the note, because obviously if he's in that much trouble that he's going to lose his 160 acres over 20 grand, he has some financial issues. And I said, you guys need that $400 a month, it sounds like to me. So why discount it so heavily? And so he was just like bending over backwards, thanking me. And then I was making a fair return. I did end up putting this in one of our self-directed accounts. And if you don't have a self-directed IRA, 401k, something, HSA, please figure out how to start. All mine are with Quest, because Quincy Long's a friend of mine. There are a lot of good companies out there. They're not the only one, but Quest, that's where all of my accounts and all my family's accounts are. And so we can invest in a tax deferred and or tax exempt status. So when you don't have to pay taxes on these returns that I'm making, it really, really shoots it up there. And you can take a small little retirement account and you can blow it up pretty quick. So anyway, that was all going along fine until we got the prelim. And there's a cloud on title that was not going to be able to be fixed quickly. And I'm going, look, I'm really sorry. I can't close this without title insurance and making sure the other guys paid off. And I'm really sorry. He goes, well, what, can't you do something? And he goes, I can come up with $6,000. And I said, I'm really sorry, but I can't do the deal as is. I said, he goes, well, would you just buy that note? And I said, I'm sorry, I told you I can't pay you 20 grand for that. And he goes, well, what could you pay? And so then I said, well, I could pay you 15. So look at what a big discount. I bought a note with a UPB. You need to get used to that language, UPB, balance, unpaid principal balance of $38,000 for $15,000. And it's just because I don't want to foreclose on 10 acres out in the Boone Stickies. I really don't want to. But the nice thing is the guy had a long payment history and really seemed to be a solid guy. So anyway, if I would have done the original way, our 401k would have made about an 19% return, which isn't bad. I was happy with that, right? But because I couldn't close it that way, he had to solve his problem on the 160 acres that he was very attached to. He was willing to let go of this little note secured by the Lancaster deal that he wasn't attached to. So in that case, I'm just going to show you the numbers. Hey, Axel, do I have to do something to share my screen? I probably do. Just super quick for the people that are watching on YouTube or live here. So basically, I'm going to just run through that note, and then let me see. So we need $20,000, and I think remember, I was going to take assignment of that note, and I was going to charge him 12%, and I think we were at 36 months on that. Might have been shorter. Okay. So something like this is what the note kind of looked like, $20,000. But we know that he was going to pay, he's going to pay me a $2,500 origination fee. So really the money that I have left in the deal is $1,750 for our 401k. Let me see if this works out. Yeah, that's about right. So we were in the 18-19% range on that, right? And that was a fair solution for us and for him. That's a great little investment for our self-directed. But because he couldn't do that, here's the note that I bought, and it's fully amortized. So 0 goes over here. I think the rate on that, I cannot remember actually. There's something like 142 payments left. Okay, I think that was pretty much the note. Oops, 144, maybe 12 payments left. Yeah, oops, I'm going the wrong way. Okay, a little less than 140. So that's about the payment that I bought. And then instead, since I just had to switch change it, and he goes, look, if you can if you can get me the 15, he says, I can come up with the other, and I can save my 160 acres that I'm really, really attached to. And rightly so, right? He's owned it for like 25 years. It'd be a shame to lose it over 20 grand, right? but our account only paid $15,000 for that note just because of our underwriting for safety. So when I calculate for yield, it's 31%. So I was trying to help him out and leave more juice on the table for him. And it was a great idea, make a loan against this property and take assignment of another note to service the debt, since he was always getting in trouble with servicing debt for whatever reason. And that would have been great. And then it didn't work, but then it sort of worked, and even better, right? So I guess hopefully he's very happy that he was able to save himself from foreclosure. But this is a phenomenal little return for my one of my retirement accounts that we're self-directing. I don't let anyone else direct my money, and you should really think about it. It's just part of financial literacy, is learning how to self-direct your own retirement accounts, and then you can do a lot better for yourself, in my opinion, if you'll put a little into it. So, all right, so that's enough for there. Any questions, comments on what I just shared?
Shelton has a question.
Yeah.
He's asking, do you use an IRA, LLCs to hold your notes?
I don't, but Quincy from Quest IRA is always, and Walter, two guys who are going to be speaking at my event next week. They're always trying to get me to do things in a personal property trust. So anytime I own real estate, I never own, I try never ever, sometimes it accidentally happens, but I try not to hold anything in my personal name. So I always use the combination of land trusts and LLCs as the beneficiary of the land trust to own my buy and hold properties, and sometimes even my flip properties, depending, especially if I'm going to do owner carry as my exit strategy, then I like leaving them in the trust, because then if there's a problem, it's easier for me to sort of remedy the situation without as many legal fees generally. So when you're buying notes, it's not as risky technically, because you're not having a real ownership interest. But then we all know that, if you're in the business long enough, you're going to take one back at some point or another, right? You're going to foreclose, and then you are on real property. So there you are naked, in public record, in an entity or in your personal name that you never wanted to be, because you have a lot more liability and exposure when you own real estate than when you're just a lien holder. It's not a bad idea. I know people do that. They have LLCs or personal property trusts or some other entity that they take their notes in. I would say that's a great strategy, but don't let that hold you up. If you're going, I can't invest in a note, I can't get started in the business until I have all my ducks in a row, just go with what you have and just go. Like, that's what I did in the beginning. A lot of people do. They're like, you just get started and then you just make corrections and improve your system, but don't get in paralysis of analysis and prevent yourself from starting by being worried about the exact right entity structure. For most small mom and pops, I'm saying. I mean, obviously, if you're raising a big fund, a big bunch of money from someone else, you should probably give a lot more thought to that. But anyway, any other comments from anyone else? I think, is Ed on here? Do you actually have a mic, Ed?
I'm on, Dawn. Good morning.
Hi, good morning, Ed. You want to comment on that? Because you've done a lot of. Can you turn up the volume on him, Axel? I didn't hear him very well.
Can you hear me now?
Awesome. Yeah, that's a little better. Yeah, so you've done a lot of private loans. How did you have an LLC?
Yes. I had an LLC for my lending, a separate LLC for rental, and a third LLC for rehab.
Fantastic. Super great advice from someone who's very organized. Right, in the beginning, I wasn't very organized. I was just like, woo, just like I learned some things and I started playing with it, So
I do have a hint that I learned from my CPA after the fact on a property I had to take back, that this is, he said, aggressive but legal, that if you have a note that's in default and you don't want to take it back in your lending entity, you can transfer the note to your rehabbing entity, and that carries forward the basis of any losses that you have.
Oh.
But if you foreclose in the lending entity and have the court transfer the ownership, the title to your rehabbing entity, you can't carry your basis, the loss basis forward.
Gotcha. So that's a really good trick. I should have thought of that. You know, it's kind of like I said, it's kind of like fire, you know, aim ready. I don't know. That's just a lot of times I'm just sort of wired to do that. Just get in and make something happen and then clean up and do the best. Other people, they're great at getting their ducks all right in the beginning, and they know exactly what their 5-year business plan is and all of that. So yeah, on that Baltimore property, wow, am I taking a bloodbath on that one.
Sorry to hear it.
Yeah, you know, remember we were talking on the phone. So this is what happens. So this is just not all sexy, right? I mean, when you're in the note business or making private loans or, well, any kind of business, really, there's risk. But this case, I really owed like over $100,000 on this deal, and I got an offer, so I took it back through foreclosure. I got an offer for $55,000, and they just fell out of escrow. So it's just like, wow, this is one of those experiences. So it's just kind of like you earn your stripes. So you just, when people are thinking about getting into the business, you have to know it's just not like an e-ticket ride. Like sometimes people will, you know, you're not at Disneyland where there's little tracks and nothing can happen, you know. I loved that ride when I was a kid, the little motor car thing. But right, Ed? I mean, stuff happens even if you're doing your best. And this was not my best decision ever, obviously. So this is one of the real bad, you know, one of the worst ones actually in my portfolio. But this is kind of how you learn and you grow. And but people who go, oh, I want to invest in notes. I saved up $15,000 and this is all I have to my name. I'm not going to take that money, or you know, or they're like, they have no idea what the note business is about. They don't know that things happen in people's lives, or there's an ebb and flow. Sometimes things will get behind and then we'll catch up. I was just on a phone with a homeowner last night, and he's calling me and saying, I got that letter that's attached to my door, and we were out of work for several months. Thank you for being so patient, but here's what we're going to do to catch up. So I have to have an investor that understands that and is not going to pretend like I'm not guaranteeing things. When people partner with me or I'm helping to service a deal that we're in together, I mean, I can't guarantee those payments. So you have to know, if you're thinking about investing, that you do the best that you can, but life happens, you know, and that's true in the stock market too. You know, if that drops by half, what are you going to do? Go foreclose on Wall Street? You know, so things happen. And I think it's really good to educate yourself about what you're getting into and diversify a lot. I don't have everything in one basket. I have real estate, I have notes, and I have geographic distribution, so that one catastrophic event in a certain area is not going to wipe out my whole portfolio. I have some short-term stuff, some long-term stuff. I actually do better on the long-term stuff because when it pays off earlier than agreed, boom, you know, it's better than being a private lender. But there's a lot more opportunities for lending. Gosh, I have some positions in gold and silver, and you know, a little cash under the mattress doesn't hurt, and food and water and guns and ammo, all the things, you know, the prepper stuff, even crypto, so what the heck, you know, some Bitcoins and a few other altcoin things. So I don't know. I just kind of throw a bunch everywhere, not knowing how our financial reset is going to play out. So now, Ed, there's a chat from you, how to invest over the entire market. So since we're just chatting, you want to go there and chat about it?
Well, that's my question.
Yeah.
I mean, let's take the extreme example. And I know several people, both in person and kind of at the guru level, that have had this experience. They're rehabbers, and they're good at it, and they're doing multiple properties at a time, making fabulous income. And then the market tanked in the '07, '08, '09 period, and they lost everything. The bank took back the properties. They couldn't sell them to cover their hard money loans, and they lost everything. And at least one of these guys lost his house and his marriage, and his whole life fell apart because he had put everything into the assumption that the market was going to stay good and he could just keep living this high lifestyle forever. And you mentioned the stock market earlier. I mean, every so often it tanks 50%. And that means you have to have 100% return to get back to where you were, and that takes years. And the older you get, the less time you have to pull that off. So my project that I'm thinking through right now is, how do you invest over the total market cycle? And whatever it is that I'm doing, and I've picked something that I think should be on the safer side. But it's the question I'm asking experienced investors.
But yeah, so that's a great question. You're not even talking about investing outside of your geographic. You're talking more about the different strategies that you can use as the market changes in your own backyard. Yes.
That works.
Okay, so then what's your idea? Let's hear it.
Well, as you know, I changed in the last year from making rehab loans to making landlord loans. And these are long-term loans at hard money rates.
Right.
There aren't very many deals that work, but when they do, it cash flows for me and for the landlord, and it improves property in the neighborhoods. And there's always something a little funky about the area. There's a railroad track nearby, or there's a rock quarry at the end of the block, or something. But they're high cash flowing properties, and I feel that if the market drops, that those properties have a lot farther, not very much distance left to fall, and that as people can't afford their mortgages, even if they're not losing their homes, there's going to be pressure downward that's going to increase rents and demand for those properties. So that's the gamble that I'm taking. I'm also holding cash to take advantage of opportunities that occur. But I'm just asking the question of experienced investors as I go around, and sometimes I get good answers and sometimes I don't. But I'm asking it this morning just to see what you have to say. Yeah,
anyone who's on the call that wants to speak to that, you can just think of this as a sort of informal mastermind. And for me, I've been thinking about, I like your landlord idea, where you're taking longer positions. A lot of private money has a hard time, you get two groups of people. You got the short-term people that want to make loans and they get their money back inside of 2 years. They don't want to be locked up very long. And then you have the people that usually are willing to buy fully amortizing paper and go out 30 years with me if they need to, right? But they usually have a hard time cross-collateralizing or cross-pollinating with each other. So I try to get a lot of my short-term people to diversify and be willing to go a little bit longer with me. But I think what you're talking about is you got something in the middle that is sort of like your hard money thing, but your equity position is better. It's a tried and true property. Someone who's got invested a lot in it. Maybe you're 50 cents on the dollar, but you're willing to go maybe 5 years or 7 or 8 years instead of these 2-year short private money deals, and you're not going super long either. So
Well, I am going super long.
Oh, how long are you going on?
I'm doing a 25-year amortization or less.
Oh, wow. And what interest?
But I'm charging 14%.
Ooh, and okay, well then in your market, the price point makes it so that makes sense for the landlord. They can still cash flow.
Sometimes. Not every deal. There's a lot of deals in between what I do and what banks do that just don't get done.
Gotcha. So, well, I think it's a great niche. You can, it's a whole different exposure than the rehab flippers who the story you told, you can get caught with your pants down. If the market turns, usually it turns pretty quick. So I mean, for me, I'm like, okay, I'm only a small mom and pop operator anyway. We're a small family operated investment company doing both property and paper. At any given time, I've got maybe 2 rehabs going on. And just so if the market turns, super quick, I'm not going to be so exposed, and have too much leverage out there. Plus, when I buy something, now you're just talking about lending, but when I buy something, I have to have 2 or 3 valid exit strategies, so that, let's say I buy a flip or I go, okay, well, this should be a flip. There should be 40 to 60,000 easy in this as a flip. And I don't do a ton of it, so I'm not the most experienced person, but I go, well, if the market turns right before I get to the closing table, or before I get to marketing it, will it make sense as a regular rental? So I run my numbers. Okay, yes, I can rent it for this, and okay, and then could I own or carry it? Would that make sense? So I have to have 2 minimum, preferably 3 exit strategies that make sense financially, just in case, because I feel like we're in a very uncharted territory. I'm gonna go out there like a weirdo and say I don't even think the Federal Reserve will be functioning at some point. I don't think it'll last even 5 years. So I think we're going to be transitioning into a whole new system, which I'm glad. I absolutely hate the central banking system as it's conceived. It's a debt slavery system, and I'm reading a couple books to remind myself of how disgusted I am with our financial system. But who knows what's going to, the transition to something better, something asset backed, or some other thing, even crypto. I don't know what it is going to be. Whatever combination, you better just hunker down. That's my thing. Anytime I do something, it's not like I don't do things in the marketplace, but I'm careful. Like I'm going, okay, if everything stays the same, this is great. But if something changes, it still makes sense because of this, or this that I can do with it. So to get back to your point, Ed, my comment, and then we'll open it up to other people to say something, is that I think we're at that point where it wouldn't surprise me, anytime that things could get, could turn around again, or we could have another sort of recession or crash to some degree. And so I'm done buying and holding. Like I've got enough. I don't want to buy and hold any more properties. And I'm still doing the note thing, but for me, I still want to leverage real estate and what I know how to do with it. So in my market, Ed, what I'm thinking of doing is just focusing a lot more on doing subject to deals, lease options, things, rental arbitrage, so I can rent something from someone, and then do a short-term rental business on top of it and create cash flow that way, but without me having to own the real estate, So I'm just thinking about switching to more of, of course, anything that comes across my desk that makes sense, I'm going to do it. But I'm just going to, going forward, be focusing more on sub-twos, rental arbitrage, lease option kind of strategies, just so that I can minimize my exposure to any downside, but still create cash flow, right? So who else wants to comment on Ed's question? And we're about half of our time's down. So but this is a great topic.
One quick question. What is rental arbitrage?
Is anyone here in the short-term rental business? Okay, well, so I learned this word from Al Williamson, who's actually one of our speakers next week. He is his website, Axel. It's at I can't remember what is Al Williamson. Go to propertypapersummit.com. Scroll down. He's one of the speakers, and see what his website is. But so basically, somebody has, let's say a unit that maybe a mother-in-law unit on their property that they're not using and they don't want to do it, right? So they don't want to be a landlord. So I'll say, look, I'll pay you $800 a month, and I sign a lease with them. Now they're still the owner of the property, but I have the right to rent it from them for $800 a month. And let's say that that's probably a little bit maybe at or below market value even, but if I already know that I can bring in $2,000 a month, Airbnb type of thing, so I put in the money to furnish the place, and then so I lease it from them. So the arbitrage is that I can rent it for $2,000 and I'm only having to pay them $800 or $1,000. So I'm leveraging that lease agreement just because they don't want to have a business. They don't even want to be a landlord, but they want some income from a unit that they have. So I don't have to buy the whole unit, the whole property, or even if I could, I just have to get it rented. And then it's the same thing about money, right? Like arbitrage is how the no business and everything is so important to how I do my business. Is I might have an investor that's happy with, actually we just sold enough to someone who's real happy with 6.5%. So anywhere from 6.5% to 9%, sometimes 10, depending on it, with an average of most of my investors are in that 7, 8, sometimes 9% range. And so, but I have a deal that's yielding 12%, and my investor's taking 8%. So I have arbitrage. I've got leverage. So there's 4 points of does that make sense? I didn't really explain that very well, but like my cost of money or my cost of the asset is low, and then arbitrage is that I'm creating a spread on top of that. So, so even if there's some problem, like the plumbing goes out, that's not on my dime because I don't own the property. I'm just like a tenant and say, hey, you guys got to fix this problem. The problems that are mine are the furnishing, the Wi-Fi, things like that. So there's so many things that you can learn how to do that don't require a ton of money, just smarts and the willing to be open. So each one of my properties that I added to our portfolio in the last 18 months, it's been a rip-roarer of a situation, but I have 3 levels, 2 or 3 meaningful exit strategies. But like for me, just because I don't know, grew up Mormon and just whatever, so here's what they mean to me. Number 1, I have a lot of fun with it because I was so paper heavy. All I ever had was paper. Now, when I came here, I had a lot of fun and I could actually outperform some of my competitors because of the strategies that I know how to use, right, from the paper business. They really gave me an advantage when I turned myself to real estate investing. So building, great wealth building, great cash flow now, great long-term wealth building. So it's fun, number 1. Number 2, great cash flow. Number 3, if it's needed, I own and control a handful of properties in my local market that are fully furnished, and that at any moment, if I have family members that I've created refuge. I can quickly assimilate and take care of the people in my tribe where we weather a short-term, disruption in how things are working, or inflation gets out of hand, or people lose jobs, and we need to sort of band together to survive whatever, to gracefully survive a sort of transition, which I'm enormously positive about. I just don't know, the level of upset or the remodel period, how long that'll last and what it'll look like. But so for me, I got it covered. My reasons are I create refuge, I create cash flow. At the same time, it creates cash flow and long-term wealth building. And like I said, I have to have fun in what I do, or I just can't do it. You just have to have fun with what you're doing or find some sort of meaning in it. So that was a long-winded description of what is rental arbitrage. Axel, is there any other questions, or anyone else want to unmute themselves and just speak up and just talk? We've got 20 minutes left.
I have a question. I was wondering, in our area, there's just possibilities for rehab coming out the ears, and the market is still really great.
Okay.
So we've been able to flip and do well, except since, because of the short-term capital gains, I'm holding now a couple, and I'm out of credit line. I've done some good projects, but I've used my credit line and I've used my money. I'm probably a little tight. I'm all right because they've been good, and if I had to sell them, there's plenty of money in them. But I'm getting good rent off them. I guess I'm just wondering how to get in a situation where there's people who want to, like when Ed was talking about rehab loans. I mean, I would like to almost be the construction management, like I see the places, I understand how to do it, and I've got people I can do it quick and make good money, but I don't have the money myself. Does that?
Okay. Hey, is this Deirdre?
Yeah.
Hey,
Hi, Don.
how are you?
I'm good. I'm sorry I'm missing the meeting.
I am too. It was great having you last year. But, great question. These are exactly the types of things that, the property paper, how those things dance back and forth.
Yeah.
And it's so awesome. So this great conversation. So what I'm hearing you say is, hey, in my market, where I forget, are you in Montana or?
Yeah, I'm Wyoming, actually.
Oh, Wyoming. Okay. Yeah. So you're in Wyoming, you're saying, hey, the market's still good. I can, it's ripe for the pickings. You can still make flip, but the short-term capital gains are killing you. So you're trying to say at least own them, for a year or more?
Yeah. And I see all these opportunities, but I mean, there's just tons of opportunity. Cody is a touristy town. I mean, there's tons of opportunity, but I'm just one person with not enough money.
Well, that's great. I'm just one person, and it's just interesting in our businesses. Isn't this so true? I mean, I agree that there's times when you can be equity rich but cash poor, and it really, of all the things, it's like it really binds me when I'm not as liquid as I want to be. It really cramps my style. It really cramps my style. So even though I can go, oh, I've got money sitting in the bank, I don't trust the bank, I got to get it working. But then if I don't have enough liquid, then I feel bad for myself, and I feel all stymied with my creativity. So
yes,
I totally get you there. But that's I am sure that Walter and Quincy and the conversations that we'll have, and I'm sure that we had last year, can speak to trying to figure out legal ways to get some of this stuff inside your self-directed accounts so that you don't have a taxable event at all. I mean, we bought a property inside of our 401k for 60. We're all in at 60. I think that after we do have an interesting situation with it, but the market value is like 200. So yeah, like I'm in it at 60, and once I clear up title, there's a quiet title action that I'll eventually have to take care of. But my gosh, and then someone's going, oh, you're going to have high taxes. And nope, because it's inside of my self-directed, 401k. So,
well, how do you,
but I don't want to go down that rabbit hole.
Okay.
One, because I'm not as articulate in that space as, people that have been doing it longer than me. And number two, I think let's go back, because this feeds it to what kind of Ed was talking about in the beginning. But so you need to get liquid. You got situations that make sense. You're trying to reduce your taxes, make that reasonable so that your taxes don't eat up everything. But you need to get liquid. So do you have a line of credit? So that means that these are free and clear. There's no recorded mortgages against them?
Yeah, both of them. The one we just did, we did a mortgage on, and it's a super good deal, but I didn't have my own money for all of it. So I used the rest of my line of credit. So my line of credit's kind of maxed. I'm at the end of the line of credit. the one, so I don't know what exactly, I guess the long and short, I'm out of money, but there's opportunities all around just now.
Well, see that actually, this is fantastic, because now it's not just sort of a nice thing, but you're going to have to learn how to use other people's money. And this is a phenomenal thing to have. Like, do you remember my story where, like, by the time I finally figured out what I was doing from my nursing job to this note business thing, I was out of my own money. And you know what that forced me to do? Figure out how to leverage other people's money. And that's like, I have none of my own money, except for I had become what I'd become over the years of investing in myself, and, you know, whatever that trail means. But so this is great, because people need to know that if you don't have to have your own money. So I'm just gonna like throw off ideas. Is you can have, in fact, Jim Ingersoll is going to talk about this next week, about JVs and how to arrange joint venture arrangements with people. So yeah, you give up some equity, but then you don't have the debt service, and you can ride something out a lot better.
Okay.
And like for me, when I'm acquiring, I try to, the most I can do is try to get owner financing, try to get the sellers to be my bank. So I don't have to get a line of credit. I don't have to get a bank loan. I don't even have to get private money. I don't have to tie up all my own capital. Try to get owner financing on more of these things. Now, it may, you go, no, all of the deals are REOs or whatever. That's fine. But, you know, I'm just saying, I always try to make I'm always like, I want that mom and pop seller to be my bank. That is always, whether I plan on flipping it in 6 months or holding it for 60 years. I want owner financing. That's always like, oh, you know, unless it's just like, oh, price is great. Yeah, I'll cash you out and I'll bring in a partner. I'll borrow money or bring in a partner. The other thing is, why couldn't you, and I want to say that there was a guy that I was doing business with a while back, and he always held them for 2 years, exactly for that long-term capital gains conversation. So what he would do is he would do lease options with tenants, so that it's sort of like an owner carry, but he was still on title.
Okay.
Or putting it in a land trust to do the same thing. So that's why, if I know I'm going to keep something and I'm going to owner financing, I like putting it in a land trust. Number one, you know, I don't like my personal name on things. I want to be a poor beggar as far as anyone looks me up online. I hope I look like I own nothing. That's my goal. And then you can get someone in there like on a lease option sort of a deal, and then you don't actually execute that option, you know, till later. And it may be, or if you could create a note to them, if they have a ginormous down payment, then you can create one, maybe two notes, and then to get liquid, you sell off the front.
Okay.
Maybe you keep your equity, you know, in the second remainder portion. Does that make sense? So
Okay.
you can structure an owner carry with people, and putting those together is pretty important. And depending on your market, you have to sort of be sensitive to what's realistic. But that's a super, you know, common thing where people like, okay, well, to sell it, I'm going to need to carry. But then I need to get some cash. I don't need all my cash. I don't need all my profit. I just need some seed capital to keep doing, then, you know, to create. Because if you can take down a property, you sell it on a premium, on owner financing, you keep your profit. Maybe you'll keep the down payment, so you get some of your money back, and then you keep a second or the remainder interest in a note, but you sell off the front end of it just to get liquid again. But now you take that and you make another deal, and this is hanging out there. This is money that's going to come to you down the road, right? And then you move that seed capital and create another remainder interest in another second. And then you take that, you sell the note. You know, you can joint venture, you can borrow money. I think the joint venture or selling off front end partials, or a small a first when you're holding a second, I think that can be a really good strategy. You just have to know how to put those deals together, you know, and you got to, what you need to me, I keep telling people all the time, if you want to, you know what the lowest hanging fruit for getting involved in the note business is just to develop capital partners, the end. So even if, let's say you're just getting started and you want to know how to create passive income out of thin air, and you've invested enough that you know how to speak the lingo, you've created some connections. And so what if you come to me and say, Don, just sell me a note. I'll be willing to take 7%. And I go, well, I have any number of opportunities for you. If you're willing to take 7%, I can get your money to work right now. And they're going, great, because they have money. They have a financial partner who's you know, they're sick and tired of making 1 or 2% in the bank. You go, gosh, if you could get me 5%, 4 or 5%, I'd be happy all day long. So, you know, they're only getting 7% for me, but they're only having to pay their partner 4 or 5%. So they've got that arbitrage going. So they've got a 2-3 point spread. And that just means that out of every $1,000 payment, maybe they get to keep $70 of it. And that's passive income out of thin air. You know, depends on, does that make sense?
Yeah. I'm writing.
The most valuable thing you can do is create money partners that aren't in this space going, you know, like Ed needs 14% and I need a higher than average. That's why I always try to get regular people to be my lenders, because you ask them, what's the best investment you have? And they might say, oh, I've got an annuity paying me 4%. Great. So if I can pay you 4%, would you be willing to carry for me? You know, like, oh, okay, that makes sense. Because I'm giving them the best they can do out there in the conventional world. So that time to cultivate people from the ground up that have never been in this space is the most valuable thing you can do. Because if you can get money at 4, 5, 6%, you can get right now making passive income out of thin air without any of your own money. But your time, you have to create relationships. You have to, you know, educate yourself a little bit so you know, sound like you know what you're talking about. And it's not a bad idea to invest a little bit of your own money, because then you have stories to tell other people, and then they know that you have some skin in the game too. You know, where I did a deal where like it was a little outside of the norm, and it was let's say it's $100,000 loan. Well, I might only borrow $95,000 from someone else, but then I'll put in $5,000. So if someone knows that I got something to lose, and plus I'll be the first line of starting foreclosure and doing all that bit, you know. But so does that make sense? So
I think that's what I think you hit it. What I'm missing are those money partners, because I'm going about this wrong. I'm going to the bank to get part of my loans on these deals.
Yeah.
And it's worked, but it would be the joint ventures and the money partners.
Right.
I can be utilizing a lot better than I am.
And you will be doing a service to those people. It's not like it's just for you. Look, okay, I'm sure the bank is happy to make your interest, but think of how many mom and pop people are going to be devastated if their retirement account or their pensions or their stock market or whatever, if those take a big hit, there's going to be a lot of people scrambling of how do they make it.
Yeah.
Until we transition into a fully a really beautiful version of our culture, I think is going to come out as new technologies get released and there's not all this suppression of all the good things, you know, for humanity. But in the meantime, a lot of mom and pops are not going to know what to do. So think of yourself as sort of there's some self-serving there, but actually you gotta just pretend like you're a missionary, you know?
Yeah.
But aren't you Mormon?
I am.
Yeah,
I am.
so you know all
get
about
that.
You don't know all about feeding the missionaries and being
That's right. I've got one out there, so I get it.
No, so just really it's a service. And that's why I keep hounding, go out there and create financial solutions, just one mom and pop to another, because look, maybe it's not sexy. Maybe you can't do 1 million or 5 million at a time. Who cares? Just steadily Be someone in your community that can put a deal together, and then you can bring other mom and pop money. So then we cut Wall Street out of it. You know, the wealth vampires of Washington and Wall Street, we need to cut them out of it and just make deals mom and pop. So you got to be able to know what you're doing. Obviously you're doing well, so you know the business. That is so valuable. You know how to make money. A lot of people don't, or they don't want to. They have something else that they're doing, but they're gonna need something solid at 4 or 5, 6% that isn't super high risk. You know.
Good question, Dawn.
Excuse me?
Quick question.
Yeah.
Quick question. So I've been a long-time real estate investor. I've been doing it for 30 years. Got, plenty of equity, plenty of money, nice line of credit, great properties, do rehabs, all that stuff. Have about 100 rental units. Things are going great. I want to get into notes. What would you recommend I do if I want to just get started with doing JVs, joint ventures, with someone who's into the note business? What would you recommend? How do I more or less screen them? Because it seems like there's a lot of people getting into it and they're looking for money. And, I just want to make sure that my money is safer, safe.
Gotcha. So great. What's your name?
Jeff.
Jeff?
Yep.
Jeff. Okay, great.
With F's. Yeah. As in Frank. Yeah. Jeff.
Jeff. Okay. So fantastic. So you're a longtime, very successful real estate investor, done lots of rehab flips. Do you also have buy and holds, and do you own a portfolio?
Yep. Yep. Plenty, about 100. So there's plenty of cash flow and all that.
Yeah, I missed that.
Yep.
Fantastic. So, have you heard of Mitch Stevens?
Nope.
He's another great guy you should check out. Mitch Stevens out of San Antonio, Texas. He wrote this book like My Life in 1,000 Houses or something, but it's all about the owner financing. So anyway, there's a lot of good people out there that are a lot more robust in the kind of product and education that they're at. I have bandwidth for my little things, but I have no trouble, and I think Jeff Armstrong has a note of it coming up soon. I think in a couple of weeks down in San Diego. So have you been around to note conferences and different events?
There's the Distressed Mortgage Expo in New Jersey coming up. I'm gonna hit that. It's next weekend. It's local. Okay,
so so I always tell people that you might not like this, but you may be looking for something a lot sexier or whatever, but a lot of times the low-hanging fruit to you getting in the note business is you should just carry paper on property you already own.
Right. Yep, that is definitely an option of doing owner financing, correct?
Right. I mean, and so depending on the price point, now you're going to say, well, gosh, I'm not going to charge them more than somewhere between 6 and 9%. I don't know, something like that. You stayed nice and compliant. But if you have the price, look at even like I'm only like little mobile home deals that I did a couple 3 years ago when I first got to town. That was one of my first projects. So I'm only in these little mobile homes for, let's say, $12,000 all in, but I sell them for $25,000 and I take $5,000 down. So, and I'm only charging them, now this is mobile home paper, I charge them 10%. Which is fair for mobile home paper. Mobile home in a park paper, very different, right? So you're only making 10% on your money. No, I'm not, because of the price differential. So it's not hard, depending on your market, to get in the 30% and above return when you do owner financing strategies, right? So that's one way that, it's pretty easy to underwrite yourself. Make a date, go to the coffee shop, dress up, room, take a mirror and go meet yourself at the coffee shop, and then you can see if you want to do business with that person. That is to do business with yourself, right? Because you know yourself. And like I'm saying, you can create 30% plus returns just in buying. If you can buy something for 40 and sell it for 80 on owner carry, you're gonna make north of 30% on your money probably.
Okay, so there's terms of the deal. I get it. There's the the product, the house, and then there's the the buyer. Got to get somebody with some money down and willing to do owner financing. But so how do I facilitate that? Do I just go to any lawyer, or do I go to a loan servicing company? I mean, how do I get the docs? Is it?
Okay, I'm so glad you brought that up, Jeff, and we're about out of time, so we'll have to pick this up maybe another time on another call or something, but
how do I facilitate the deal? Where do I go?
I love this question because people want to go, oh my gosh, owner carry, that's so way different than anything else. You know what? It is not different than anything else, really. Like, it's still a sale of the property. Now, if you use realtors, get your realtor involved. You're going to use the same title and escrow. The only difference in these transactions is who's the beneficiary on the deed of trust or mortgage, the note and deed of trust, right? So
okay.
You're the bank. That's the only difference. It is still a regular sale. You still market the same to get your buyer. Of course, you're gonna, since you're your own underwriting department, or you're gonna hire a loan originator. You can ferret one of those out that's licensed. If you're gonna do a bunch of them, you need to do that. But if you're just gonna start with your first one, you are your underwriting department. So you need to know, what am I comfortable with? My risk reward, what's available in my marketplace, and just work it that way. But it's so easy. That's your low hanging fruit for making incredible returns in the note business. Because when you get into, I'm going to partner, there's a lot of JVs out there. Okay, we're buying, all these big tranches of non-performing paper, and you bring in all the money, and we'll split it 60-40 or 50-50 or something like that. But it's all your money, and they're working it out, and they keep 40-50% of it. That's kind of how it goes. So in that case, the operator and their system is the most important part, whereas it's so easy for you to just carry paper on something that you already own. And then if you want to even bump your yields up more, then sell off a front end partial to someone who's happy with 6, 7, 8%, and your yields will go through the roof without you having to do a nail biter of, if I give this person $250,000, I wonder what I'm going to get back. And if they're good at it, great, make some money.
Okay,
but if
so
they're
that's
not,
super.
your money's gone. And
okay.
what, you just got to figure out what pirate you're going to want to sail with, but if you do your seller financing on your own, there's a lot more control and less, I don't know. I just think that's, if you're just getting into notes, figure out that piece first. But yeah, go get out all that you can and meet people and hear the lingo and get a feel for it. That's a phenomenal idea. So thank you for coming on there at the end, Jeff. All of you, this has been a phenomenal call. I always appreciate you so much spending your time with me. I hope it's been worth the hour together. And like I like to say, I'll say it again, now use your powers for good and go out there and create financial solutions, just one mom and pop another. I will catch you next time. Until then, take care. Bye-bye.
You've been listening to Virtual Coffee with Dawn Rickabaugh. For more, please visit notequeen.com.